Hello traders everyone, welcome to our new webinar. It's Monday, March 18th, so I hope you had a wonderful weekend. We had a pretty volatile week ahead, I believe. Plenty of central banks policy decisions. So let me know in our chat box, please, if you can hear me well. Is everything fine? Okay, hey Martin, so looks like that we are fine. What's going on? Well, as you know, we have seen a pretty interesting, firstly a sell-off of the US dollar a few weeks back and now a rebound. So in my assumption, looks like that dollar is now in a neutral stage here. It can be even turning bullish for temporary period of time, but regardless of the near-term swings, I still think that the higher degree trends for the dollar will stay to the downside. But it could be quite volatile price action for this week. As I said, we have Fed, tomorrow you have Bank of Japan, then we have Bank of Australia, England, and even Bank of from Switzerland. So there will be some volatile price action for sure. But before we dig in some of the FX markets and also FX market and also some stocks and cryptos as well at the end, I want to look firstly at the 10-year US note. So we've been talking about potential completion of this corrective pullback, but looks like that this one is now turning a bit more complex, but still I believe it's part of an ongoing recovery, and the bottom has been found here back in October at the end or start of November of 2023. So the current reversal to the downside obviously is happening because the CPI last week from the US came slightly higher than expected, but still it's not really. Then later on there was some mixed data, and that's why maybe US dollar could potentially stay neutral for now. But looking at the US notes here, I still think that this could be a complex correction. Maybe even we could reach 61.8%. If that would be the case, then as you know, we could see some euro pound and more weakness ahead. Now when it comes to dollar index, I'm looking here. As I said, there is a neutral zone, and the reason why I'm saying that there is neutral zone is because the drop from the highs has been in 3 waves. Okay, then we rallied, and now we are still trading below this upper trend line of this potential downward channel. Okay, so to say that we are turning bullish, of course I want to see this trend line broken. And as you if you were with us last time, as you know, I said that this drop could easily be in 3 waves. Actually, I was referring to euro in 3 waves because prices stopped at the key trend lines. So now if we really are turning bullish here, you have to see a daily close out of this downward channel, especially after the Fed and after Bank of Japan tomorrow. Okay, so the next 2 days we could have some answers if really this dollar index is headed higher or maybe just neutral or even can come back to the downside. It's really hard to say where we are headed next from here unless I see this breakout. Okay, so this current rally on dollar could potentially also have an impact on cryptocurrencies, which came to the downside, and I assume that even cryptocurrencies could potentially see more weakness or stay trapped in this current consolidation for some longer period as well. Okay, if suddenly, let's say, the dollar will break higher, if Fed will delay potential cuts maybe further than June, then I think that maybe keep an eye on dollar versus Swiss franc. Okay, why? Because I'm not sure why I was disconnected. I was earlier in some other computer, maybe I'm still logged in there, and that's the reason. Anyway, so looking at dollar Swiss here, keep in mind that inflation in Switzerland is at 1.2%. Okay, so maybe they can surprise, they can look for potential cuts, and if that would be the case, then we know that most likely dollar versus Swiss franc will rally, especially if we consider that maybe Fed could delay potential cuts. So it's all about trading between central banks, and not only maybe Swiss bank versus Fed, it could be also Swiss bank versus Bank of Japan. If maybe Swiss bank, if really be looking for cuts, and then you have Bank of Japan on the other side, who is looking for to potentially change their policy, then you know where the moves could be. It could be very interesting moves, volatile moves on yen crosses as well. So looking here at the dollar Swiss franc, I still think that now when the US dollar index moved into this neutral zone, this pair could actually even see more upside here in the next few sessions while the other currencies are consolidating. Keep in mind that Swiss franc is one of the weakest since start of the year. So I still think that this one has a potential to see further rise, because that drop, by the way, has been in 3 waves. Okay, so I'm looking for more near-term strength, and I'm not ruling out potential extension higher based on this CNB play. So we will see, and of course Fed. So we'll see if this could come true, but definitely I am looking for more gains here. Let's say there is room for another 100 pip rally while the market is trading and holding above this invalidation level here at 87.27. Okay, it's not only about dollar Swiss franc. Also, if you look at euro versus Swiss franc, that's, by the way, monthly chart, you can look that you can see that there is a very strong downtrend, no doubt, but I would not be surprised to see this market and these cycles to change here at these extremes. We have all needed potential subwaves here to complete this downtrend, and more important, the most important is this structure, this 5-wave drop from that 2018 highs, okay, in euro Swiss franc. And you can see that there is a very nice potential 5 waves down that could be bottoming, because we spiked here below this January 2015 lows, and now we're trying to recover. So with that in mind, the dollar Swiss franc could be really looking for more upside. I just think that the best rate could maybe even be seen in the euro Swiss franc if maybe ECB will try to be hawkish longer, not hawkish, but should stay on hold for longer maybe than Fed. Okay, and then obviously you have on the other side of this trade, you have the Swiss of National Bank, which who's obviously maybe the first, could be the first one to potential surprise here. Also, as I said earlier, could be the trades between central banks, so between CNB and also Bank of Japan. This could be quite interesting, but not only that, maybe if Bank of Japan would really, let's say, they would really change their policy, because there's a speculation that they will do it, because maybe now it's time. There was a GDP, they were in contraction a few months back, and now it looks like that they are out of potential technical recession based on latest GDP data. So if that would be the case, then maybe if they're really ready to act and change their policy, you will see yen crosses moving sharply. So under that scenario, focus on weak currencies versus Japanese yen. And Kiwi was also not been doing well recently, and we have seen quite major reversals, also sell-offs versus US dollar, New Zealand versus US dollar over the last week or so. And if you look also at New Zealand dollar versus Japanese yen, even this one has a potential top formation here. I'm looking at a potential diagonal top formation, not really the perfect shape, because wave 4 was a little bit maybe small compared to that wave 2, but still it can be seen, this move here in February to new highs, as a potential throw over. Okay, so I think that this reversal that we are seeing right now is actually confirming that this could be potential top, and I believe that's an impulse. So even if there will be just temporary consolidation, temporary deeper prices, I still think that there can be opportunity on the short side after the rally. Okay, so I will definitely keep on some of the yen crosses. Will keep an eye on them very closely, because I realize that there can be some very significant moves, interesting sharp moves, if Bank of Japan would really decide to act. If not, if they will just stay with the talks, and maybe this will be again delayed towards later this year, then I think that this Japanese yen will just versus the US dollar will just keep consolidating here around 150 or so, maybe a little bit lower. Now, if we take a look maybe on crude oil. So crude oil has recently moved to the upside. There's not really that much. There's still potential just temporary recovery. I'm looking this to be wave B corrective rally. Now you see that we are moving back into these levels that we're seeing a year back or so. So I think that we are at a pretty interesting resistance here around 61.8% retracement of that drop from September of 2023. And if we see closely, there is an overlapping price action, right? So within this upward channel. So I just assume that there can be limited upside. Of course, this current leg higher that we are seeing since last week was mostly driven by this speculation that Putin will win the elections, and that maybe this war between Ukraine and Russia will not end anytime soon. So that's why we are seeing potential moves to the upside. But sooner or later, other news will kick in, and I think that some sentiment could potentially change. I think that 82, 83 is still very interesting potential resistance for crude oil. If energies would come to the downside, this could potentially also be bearish for the US dollar if we consider how energies have impact on inflation, right? So that's for crude oil. Now also, if crude oil would just keep moving to the upside, or even if it will just stay sideways, I still think that one of very interesting trades could be on the Mexican peso. Now, Mexican peso has been doing very well over the last few years, or at least over the last few months. And what we are seeing is still very nice potential breakdown here. Okay, that can be happening this month, and I assume that more weakness could be seen after this current intraday rally. We still haven't seen this break below that low that goes back to July of 2023. So I think that at some point this low can be taken out, and ideally after this rally. Okay, so if we really are seeing the real breakdown, then this broken trend line, okay, that goes back to these 2023 lows could definitely be a very nice resistance at 16.80. Okay, so I'm looking this to be a very nice potential resistance for the next sell-off. If you look closely here on the 4-hour time frame, and by the way, we update all of those in our members area. Keep in mind that we still have this open door. Just a second. This still open door access to our Elliott Wave charts, meaning you will get the full access for temporary period of time to all of our updated Elliott Wave chart. So we actually extended the offer from, it was planned to end it today, but we extended it for another 2 days because of the cryptocurrencies that recently turned to the downside, and because of this Fed decision that is going to be announced this week. So if you are interested in all of those markets, all of those pairs, make sure to check our page for free access. Okay, so dollar Mexican peso, as I said, this broken trend line could potentially be a very nice resistance, and this could happen around 16.80, maybe slightly higher. Okay, there you have also minor wave for consolidation of that breakdown that occurred since end of February, and also there is a 38.2%. So I think that this region is very attractive, very interesting for potential turnaround here. And if crude oil, as I said, will stay sideways or even see move to the upside, I think that Mexican peso could do very well. But even if crude oil would come to the downside, this could have bearish impact on the dollar, as I said, because of the inflation could come to the downside. And that's another reason, still looking from the other perspective, why dollar Mexican peso could come to the downside. So from Elliott Wave terms, I just think that there is potential bearish setup right now. Of course, if we see price reaching this 61.8%, then this would be unusual for wave 4 to see that deep retracement, and then obviously my wave count would be invalidated, and I would most likely readjust some of the wave structure here on the daily, where I'm looking for the breakdown. But still, then if we really would say, let's say that we rally towards 17, then I think that this correction going back from July of 2023 will just become even more complex. Okay. Okay. Now let me check my list here. We have here, okay, we have here euro dollar. Okay, so euro dollar, that's the alternate count. Euro dollar, as I said last week, let's not be too aggressive, too bullish when the price was up here, because we still didn't see any kind of a break above this upper trend line, which would confirm that we are in a very strong rise for a wave 3. Instead, we are seeing a reversal back to the lower side of this channel. So if after the Fed price will be trading outside of this channel, then I'm afraid that we will see much more weakness, and the breakdown point could be confirmed if we see a daily close below 108.40. But so far that's still only a 3-wave drop from the highs, but it can become an extended lag if Fed would really support the US dollar, and the US yields will keep moving to the upside. Okay, so we'll see how this will play out. But for now, as I said, that's still a 3-wave drop from the high. If that would be the 5-wave movement from the highs, I could even consider potential shorts. But since that's not the case, I just think that you have to be very careful here, because if you look maybe slightly from a distance here, okay, slightly from a distance, you can actually see that market is not going anywhere. Okay, for the last year or so, we are just keep moving to the upside, to the downside, and then at some point we end back at this pivot area. So I just think that even if we see some kind of a near-term structure to the downside that would not be impulsive, you just have to be aware that this range could resume for a while. Maybe even some kind of a big bullish triangle could be forming here, which means that that corrections and price action itself could become much more challenging. But overall, what is important whenever we have some unclear patterns on a smaller time frames is that you maybe step back and look what unfolded before this range occurred. And you can clearly see that before that, going back to September of 2022, back then I think that bottom was formed, because clearly we have seen a very nice and strong impulsive move to the upside. So I think that at some point we will see the continuation of that trend, but I'm not really sure if that's already happening right now. I just think that there are different possibilities on the table for now, especially because the Fed is not, if the Fed is not really ready to take actions regarding the dovish potential policy. Okay, now if we take a look also on cable, last time I said that potentially we are having a very nice, beautiful bullish setup. Unfortunately, we are seeing prices coming back to the downside quite deeply, not fully stepped into this wave 1 territory just yet. But with the dollar current situation, I think that even pound could remain a bit tricky here. So I prepared another wave count here, which actually shows the idea that we could be headed lower for a higher degree corrective ABC pose. Okay, so if we see this 127 broken, then I assume that deeper correction could happen here, but still it will be part of ongoing uptrend. But I just think that this resumption higher towards 1.3 or even higher will obviously be delayed. Okay, but I still think that this year we will see dollar coming down, but it can be a little bit challenging time for sure based on the current structures. If we take a look also on gold, well, gold is holding up quite well. in silver as well, if we consider what's happening with the US dollar and with US yields, of course, since last week. And what we see is that gold is coming back to this SPY high from December of 2023, okay, when we were looking for this major temporary top. And what we are seeing now is prices obviously broke higher in impulsive fashion, and now the price is coming back to retest this support here, okay. So I think that more upside is definitely possible here, maybe for the final push to new all-time highs, because it could be fifth wave and looking at this 4-hour time frame. But for now it looks quite interesting, because after all we have some overlapping slow price action from the highs. It's not looking impulsive, okay. So I think that there's a very nice support 2130 and obviously 2150, as I said, the previous swing high. That's the area of potential support for gold this week. That should hold. Obviously, if we see a drop towards 2100, then in my opinion we have a failure top and we will consolidate further here. Now let's take a look also on the S&P 500. Now I still think that we are in some late stages of this impulse. Last week I've been talking about potential ending diagonal. It's not really playing out that well, I must admit, but potentially we could be seeing here a new high coming out of some kind of a running triangle here, okay. Let me just trying to connect the dots here for you. Okay, so this could be also one potential labeling, potential triangle here in wave 4, and you are going to see another break to the upside. But again, moves out of a triangles, okay, are final in the sequence, meaning that even if we see move out of a triangle, there can be limited upside around 5300. There's also some kind of a divergence building up here, and not only that, if you will check German DAX, also potential extension very nicely into 261 and 161.8% FIPS. So it's a perfect substructure and the perfect pattern that could potentially limited upside. But of course, that's still all in uptrends, right? There's just a risk that the market could pull back a little bit before we see another continuation higher. So still I'm bullish on stocks, but I'm just aware that maybe some corrections could potentially step in here. When looking at the maybe some short-term swings here on DAX, could be potential even ending diagonal for another push higher. If we see that new print high in the next 24 hours, then I think that there's a risk that prices will actually find the top by the end of the week. Divergence on the RSI here also can suggest that we are really forming an ending diagonal here, where prices are allowed to overlap, and this tells us that bullish momentum is not that strong anymore, which is clearly can be the case if we compare the current rise with this previous one here at the end of February. Now let's take a look also on some of the single stocks. Now here we have Apple. I still think that we came out very nicely here to the downside to this previous fourth wave. We have some gap higher, not really sure if that's already it, or we are going to see another retest of these support levels, but certainly we reached to this very interesting area after potential 3 wave drop, and if we can break 185, that would be above wave B termination point, then I think that more upside can be seen here. So definitely watch out these developments in this week. I think some single stocks could be very interesting. If we take a look also maybe on Amazon, let's take a look what we have here. Potential wave 4 correction, okay, it can be unfolding. This could be wave 3, maybe wave 4 stop now, so watch out for something, maybe something more sideways or deeper That's definitely very possible, but notice that wave 2 was quite sharp and deep, so maybe wave 4 will be a little bit of more sideways based on rule of alternation, where wave 4 and wave 2 can be different shapes. But definitely I think that there is a very nice potential building base for another leg higher. Now if we take a look also on Google, well, that was a pretty interesting price action so far. We have been looking at this single stock for a few weeks back, and back then we said that most likely wave B could potentially end at this gap area where we had this earnings released. That market rallied to fill this gap and came back to the downside to a new low, and that occurred now with 3 waves. So that's a pretty nice ongoing strength here, which I believe will extend even higher into the 5th wave, potentially towards 160 and up there. Of course, just be aware that there can be limited upside. Also, if you look at Adobe, this one is quite interesting. We have this gap to the downside, earnings were released, but notice what happens. Well, market is, by the way, still in uptrend, okay, because I think that that's very beautiful impulse away from that September 2022 lows. You're seeing now 3 wave drop right into these previous supports here between 50 and 38.2%, which is textbook when it comes to potential reversal levels or completion of a 4th waves. Okay, and then you have this open gap, and these gaps, as you know, sometimes can be filled, especially if they are big ones. So I think that there is a chance that this market will stabilize here maybe this week, and then potentially even recover further, firstly back to the gap and then potentially even higher. So I'm looking for price stabilization here on this one here around 500. Also looking at final stock, single stock will be Nvidia. So why I'm looking at this one is because it can gives us the very nice views of what may happen with cryptos as well. So as you know, technology sector could also face some kind of a retracement, especially if we consider that Nvidia could be here in a 4th wave, but it's not really it's not always the case that wave 4 can be deep. It could also be sideways, but what we are seeing for sure is that this can be correction. And whenever you have this wave 3 extended, like in our case, maybe the price will not even retrace to 38.2%. It stopped at the 23.6%, but of course this could still hold if this could be some kind of a triangle. Okay, the deeper supports would definitely be at the 38.2%, which I already discussed last time. Okay, so I'm wondering if maybe whenever this pullback, when this pullback here is ready to complete, if maybe even Bitcoin or cryptocurrencies will complete the current pullback. As you can see that in orange we have the Bitcoin. So obviously I will still be looking and expecting more upside on Bitcoin, because after all we have a pretty nice and ongoing strength there. So if you look here firstly on the total market cap, okay, I think that this one is probably the most interesting when it comes to Elliott wave structure. Why? Because you will notice that the first drop here, if I just delete this for a second, you will notice that the first drop, this first lag here, has been made by 3 waves. Okay, so that's the 3 wave pattern. So this drop and this potential overlaps here, okay, suggest that this is correction or part of a complex correction. But I assume that it can be part of a complex correction because we are trading the higher degree wave 4 here. So it means that there can be obviously deeper pullbacks, and you will also see that there was some very deep and strong sell-off on Ethereum. So if you look at the Ethereum here, okay, you can clearly see that that was a very strong and very sharp drop. It's impulsive. Okay, so that's why I think that we should be aware of more weakness. And as we said and also posted on Twitter, it's much easier to buy maybe in uptrends after, not immediately after the first lag, but after the third leg to the downside, because majority of traders, retail traders, after they're seeing this pullback, they will try to join the trend. They will try to join this trend. And what will occur? Well, market will move slightly to the upside, not a new all-time high. They will think, okay, market is going higher. Then you will see another sell-off that prices will take, where the market will move with the price below their entries. And what will happen? There will be a lot of liquidations, and usually this occurs in wave C position. So I think it's worth to wait on these potential developments. Maybe on something more complex. The 38.2% still hasn't been reached. There was this this very nice spike that occurred here back in March. So I think that there's still a very interesting support levels a little bit lower. But for me, it's important to see free wave structure before saying that the wave 4 can be finished, because if we'll see just, let's say, immediately just move into from current levels, from current levels right into this area, I still doubt that this will be already finished wave 4. Okay, still could be wave A as part of the higher degree ABC drop. So the important will be the structure into that potential support area. If we'll be in free waves, this could be a very nice potential opportunity to join the uptrend. If that would be only with current weakness that will just extend a little bit lower, then I still think that it will be a little bit too soon. Of course, it really depends what's your strategy and your goal. If you're looking just for some intraday trades that and that you're planning to exit before the market reaches new highs, then obviously this still can be some good opportunities for you, because there will be some rallies for sure. Okay, but maybe not immediately to new highs. Also, if we look at let's take a look here. Now this one is pretty interesting. So we have here the Bitcoin exchange, we have the Ethereum, okay, exchange outflows. Okay, so you can see here that at the top, okay, there were a lot of transfers from the exchanges. Okay, so what market thought up here is that, okay, so there were a lot of transfers from exchanges to private wallets. So market thought up here, and speculators, that Ethereum is going much higher. That's why they want to keep their Ethereum and Bitcoins obviously as well on their private wallets, because they were confident that market will be moving to the upside. So there were a lot of transfer going on to private wallets, and normally this kind of mania phase occurs at the tops. So I think that this was a pretty nice, interesting indication why market does the opposite. Okay, so now for the potential bottom of the Ethereum, what we want to see, if we want to see spike in inflows. Okay, why? Because then this would say to me that that market thinks, speculators think that Ethereum has topped out, and they will see even more downside pressure because traders will be forced to sell. So that's when you will see a lot of transfer from private wallets to inflows. So if we'll see spike in inflows, that will be the potential signal that Ethereum has reached a support. So I will definitely keep a very close eye on this one in the next few days, maybe possibly even weeks. Okay. Okay, now finally, if we take a look on Bitcoin here, this will be the last one for today. So Bitcoin, as we said last time, very nice, very strong and extended wave 3 to the upside. We are now just pulling down prices into this wave 4 consolidation. Now sometimes wave 4 can be very similar in distance compared to wave 1. So very beautiful support could be at 63,000, but I think that 59,000-60,000 is also something that we should not ignore. It goes back to this spike from February-March. Okay, so I think that this is pretty interesting potential support for the next leg to the upside. So in my opinion, we will either see more sideways here, more challenging intraday price action, especially now when we have US dollar also recovering, moving back into this neutral zone. So keep an eye also on the Fed. If dollar will just keep moving to the upside with the US yields, then obviously this would make sense why cryptocurrencies could potentially retest deeper levels. Okay, traders, thank you very much for your attention. I hope that you love this webinar. Make sure to press a like. Please, if you're watching this recording later, leave us a commentary, subscribe to our channel, and I will make sure to provide more of this content in the future. Also, if you did not activate your access yet, you still have a chance now, few days left, to see all of our work live each day. Each of the charts will be updated and markets that we are tracking. So Elliott Wave Open Door is still active and will be here for the next 2-3 days as well. Okay, traders, enjoy your day and talk to you soon. Bye.